Hey my friends, Barry Burns here with TopDogTrading.com. Today we're going to talk about how to find exits using Fibonacci extensions, how to draw them. It's going to be explained. Here I'm using Forex, but by the way, this also applies to stocks, futures, commodities. I'm using a tick chart, but again, you could use this with time-based charts, really anything, because it's all about ratios. Okay, so a couple questions that I get, and I'm going to just go down a checklist here of questions that have come in. Thank you very much, by the way, for sending your questions in. And the first one is that people have been asking, hey, how do I know where to draw these extension lines? So, very good question. And I'm going to give you an objective way of doing that here. So go down to Fibonacci Extensions. And what we do with extensions is we draw it from a low to a high to a low. Alrighty. And then the basic idea here, generally, the basic idea with Fibonacci extensions as opposed to retracements is with extensions we're looking for profit targets. So if we're buying here, then we're looking for potential profits here, 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 etc. So they're plotting resistance levels above where we are. Retracement levels are primarily used for entries. So this is not a hard or fast rule, but it's a generalization that retracements are used for entries, extensions are used for exits. All right, now, how do we know which of those to use? I just drew those lines in there and used this particular low, that particular high, and that particular low. So that's a bit subjective, right? So let's make it objective. What you can do is you can go in here to your indicators and choose our good old friend, the zigzag line, and then set this up however you choose. I like to use percentages instead of points. You might want to play around with deviation value a little bit, depending on the market you're trading and so forth. I'll set at 0.4. That's been working good for me. I like to use the high and low. So I want to draw it off the highs and the lows, not the real bodies, not the open and the close. That's my preference. Alrighty, and let's apply that. Oh, that's beautiful. Did not apply. You know, isn't it great when things work for you imperfectly when you're doing a video? Love it. Okay, that did not take either. Let's see. Let me get this for you and come right back. Okay, that's my mistake. It's 0.04. That's what I've been using. Okay, so yeah, that'll do it. Makes a big difference. Okay, so when we're using extensions, here's one of the basic rules. We are looking for really the best place to do extensions would be the first higher low. So here we had lower low, about an equal low, and then our first higher low. So as soon as we see that, then that's where we're going to do our extension drawing. It's a 3-point drawing tool, 0.1, 0.2, and then 0.3. And then it draws levels overhead looking for profit targets for resistance, for exits, for profit targets. By the way, just to be clear, if I was taking this down, okay, we have a high and then a lower low and the first lower high. So if I was doing it down, I would start from there, go to there, and go to there. And then it would draw levels down here, support, for various targets on the bearish position. Okay, so that is one way, one choice of creating an objective methodology for choosing which candlesticks, which higher highs, which higher lows to use for your Fibonacci extensions. Okay, now let us look at how to draw this puppy. So we go again from there. So 1, 2, 3. So as I said, a 3-point drawing tool. Now, the primary objective of this trading tool, as I mentioned, is to indeed find profit targets. So if we went long here, which is our first higher low, right? So boom, boom, boom. Now we're seeing profit targets at 61.8, 100, 168.8, and etc. Okay, so when it goes to 100, that is a very significant one. That is called a measured move. It's so significant, it has its own name, measured move. So that is when you should always keep your eye on and look to at least take potential partial profits there. It's very common for the market to go there, and even if it continues to go up, it'll often bounce off of that. Now, here's the problem with this particular scenario. Here's where we get into more of the advanced stuff. So this is where we get into the negative numbers. Oh, wait a minute. See, most people don't do this. They just put in the positive numbers. Because, again, the primary use of the tool is indeed to find resistance levels up here above 0. So these are positive numbers. But if you include negative numbers in your drawing tool, then when this thing fails to go up and it actually does a roundabout turn and tanks to the downside, instead of having to redraw, and you could do that, but it would be kind of tough because to redraw to the downside, you'd have to look for your, I mean, really, you can't do it off of that, right? Because you got to look for a high, and then your first lower low, and then your first lower high. So you'd be drawing it off of those three. So if you did a stop and reverse here, for example, at this high, and you went short, you can't use the Fibonacci extensions in their traditional manner. And so this is why I'm showing you how to use them upside down, or the negative numbers. So that's what we do. Now, does that work out pretty darn well? Yep, pretty darn well, I'd say. So as you can see here, we can still leave these up here. See, I'm plotting both at the same time. I have both positive and negative numbers. So where's it come down to? Well, again, you know, negative 168.8. Where's it come back to? There's your measured move, 100. That's where it finds resistance. Goes back down here. Now, it just slices it. First of all, 2 points. Does the 200 level hold? It pauses here. It pauses here. So that means it is acknowledging it. Does it acknowledge the 300? No. It just tanks right through it. So that's why you need something else. You can't just trade Fibonacci. You can't just trade support resistance of any kind. And that's what Fibonacci levels are, is they are a type of support resistance level. Because, and here's the real answer to why you can't, a chart has 2 dimensions, right? You know what? Let me actually pull this over for you. You can't see the prices over here. There we go. So yeah, chart obviously has 2 dimensions, right? So this one is price and this one is time. And that's what you got to work with, time and price. It's a 2-dimensional object. Very few people learn how to trade time. Very few people have any kind of timing indicator on their chart. Price, oh, they got everything for price. Support resistance levels, indicators that are based on price, candlesticks that are based on price, multi-bar patterns that are based on price. That's all great. You should have that. But god darn it, if you don't have indicators or something to help you measure time, you're screwed. Because time is 50% of the information on this 2-dimensional chart. So, I mean, it's just math. If you are ignoring, or you don't have a great accurate tool for measuring half of the chart, that means your probability of your success is going to be half. Or W. DeGan even went further. And W. DeGan was the one who I think was most famous for this, talking about the confluence of time and price. Said that's really what all trading came down to, the confluence of time and price. And he had a good point. So he taught a lot about timing the market. And I find that even though it is taught today, it is not taught as much as it used to. It's something that's really missing in contemporary trading, in mass at least. So you better learn it, because it's half of the chart. W. DeGan actually said time is more important than price. So he gave it more than 50% weight. I do have a timing indicator that I modified myself. Be happy to give that to you for free, by the way. If you're interested, just send an email to Barry@topdogtrading.com, request it, and we'll get you the information on that. Absolutely free for YouTube videos, by the way, or video users and subscribers. So not going to charge you for that. Okay, so I think we covered everything, did it pretty fast here, but you get the idea. Oh, you know what else would be helpful is for me just to bring up my, let's see here, to that, here we go. bring up here just to show you my Fibonacci extension properties. So here's what it looks like. They're kind of messy. They're not in order. But so 0, 100, 168, 68.1. So these are the positive ones. Look at that's a positive one. That's way out of there. And then the negative ones, you just put them right in there. Right? And then you can choose the ones you want to be active. So that's how it's done. You just put positive and negative numbers in the listings of your Fibonacci extension properties. And that way you don't have to, first of all, it gets you in earlier, right? It gives you support resistance levels earlier because you don't have to wait for another lower high or another lower low and a lower high. So that's one point. And then if you take a reversal trade here, then it's going to give you targets on the way down immediately. And number 3, you don't have to redraw the thing all the time. That's one of the problems with drawing tools is you got to manually draw them in, and it kind of can be distracting or slow you down, or you could miss a trade by doing it. This way, you got one indicator that goes both above the market and below the market at the same time with just drawing once, and that's it. Does double duty, support and resistance. So highly recommend you at least you try that out, see if you like it for yourself. And by the way, just wanted to point this out, that 300% level, even though the market did just slice through it, ignore it here, it came right back to it as here. So it did acknowledge it. This is what happens a lot with very enthusiastic markets. And there's a lot of, like, look at that big candlestick there that consolidates here, 200. Actually, yeah, so acknowledge 200 by going sideways. And then boom, this happens so often. It's another dynamic of support resistance, that if there's so much enthusiasm that the market just kind of ignores a resist or support level at first, it will often come back to it later. Because it feels, that's what Alan Greenspan would call irrational enthusiasm. And then the market gets rational again, says, we kind of just sliced through that resistance level back there, and that's probably pretty important. So then it kind of reverts to a mean type of dynamic. It's not mathematically, literally that. All right, well, if you found this helpful, I would really cherish your feedback down below. Any comments you have, give it a thumbs up. And, I've never said this before, but I've been approached to sell ads on my videos. I've got enough subscribers now and enough views that I've actually been officially asked to sell advertising on these videos. And people do this and make thousands of dollars a month just on the advertising. And I decided not to do it because I don't want to, I just don't want to dilute your experience. I want it to be just all about trading and not be distracted with ads. So anyway, I hope you honor that. And the only thing I ask is that if you do pay it forward, share the video with others, then that would be fantastic. I would love that. By the way, also I've got another gift for you, and that is my rubber band trade. This is one of my very favorite trade strategies. It happens a lot. I take it pretty much every day, actually. And I'll give you that trade strategy. You can start trading it. Please start with a demo account or simulator account. It's in a short video, about 26 short minutes. Give you all the details, where to get in, where to get out. Again, it's one of the simplest trades that I take. And that's why I teach that one first, because it's so simple. Pretty much anybody can learn it and get it real quick. So if you like that, go ahead and click the link in the top right-hand corner, that little I in the top right corner of the video, where there's the graphic that says free gift. Also, there's a link below in the description. Either way, be happy to send that to you as soon as you request it. We'll go ahead and we'll get that out to you immediately.